Good morning, everybody. Today's topic is 2026 real estate market preview. So we'll try to make some educated guess on the market, and we'll seek help from Jeremy today. As usual, quickly, I'll do a PowerPoint presentation. It'll be brief, I promise. And then we'll have our expert panel. Jeremy's here. He's VP of our Remax Realty Realty Inc. Kishore, Bhavin, Prerna, Amit, and Rajat, they are mortgage brokers. Sandeep and Janta, they are real estate lawyers. Pani is the insurance broker. Rohit is wills and estate lawyer. Prasoon is an estate planner, and Mohit is a financial advisor. So some of them are present, some of them may not be present. We all understand it's vacation time, a lot of people are away, but we still wanted to do this session today. So a quick disclaimer, as you know, we always try to bring information from reliable sources, but we cannot guarantee its accuracy and completeness. So please seek expert opinion before taking action. Thank you. And agenda for the day, we will quickly review our November 2025 market report just to set up the stage for our forecast. And then we'll quickly also review Remax 2026 market predictions and Royal LePage 2026 market predictions, which came out just last week, both of them. And then, as said, special guest Jeremy is here. We'll seek his opinion. And then we'll also ask our mortgage experts to give their predictions where the interest rates would be by next year. So, because that's another important information which controls the market. And of course, if you have any other questions for any expert panel, please feel free to ask. So quickly, this is our November 2026 report. We had actually 15.8% drop in the market for number of sales from last year. You know, I'll also ask Jeremy during the question period, why do we always compare year over year, not month over month? Maybe it's seasonality. We want to keep seasonal things in place. I'm sorry, Jeremy, are you saying something? I'm sorry, Jeremy was trying to.
There we go.
Okay.
I was trying to unmute myself, but you had to allow me. So thank you.
Oh,
Uh,
okay.
the reason we look at it year over year, not month over month, because there are seasonal trends to real estate sales. So everyone knows in the spring we have the most sales. In the summer, it's very quiet. In the fall, we have quite a few sales, and everyone takes their house off for Christmas holidays, so we get a dip in sales at that time. And so if we looked at, for example, if we looked at February versus January, almost every time you'd see more sales in February, no matter what's happening in the market.
Fair
But
enough.
February this year versus February last year is interesting. But that also brings to me the thought, Sam, you brought this up in August that because fall of 2024 we had three great months in
Yes.
fall of 2024. So you told me, hey, the predictions are good and everything's looking good, but don't forget we had such great numbers. They were so outperforming 2022 and 2023 that we probably will see a drop in sales number. We're not going to hit those numbers we hit in 2024. So even though the market was trending a little bit better, you did bring that to my attention that we'd see that lower number in 2024. So
In
you were right
2025, yes.
on and accurate with that.
Yeah, yeah, great. No, that's exactly what happened. We cannot match 2025 numbers for a strong reason because we were actually on a big rebound last year, right? And then, of course, we all know what happened with tariffs and other things, and we are now on a new recovery path. So this is showing where the number of sales stand year over year. We are almost near the bottom. We are better than a couple of years, like 22 or 23, but definitely we are much below average numbers of 20, like for the month of November. But the good news is that we are on a recovery, right? And we'll discuss that more down the line. So this is the months of supply. The months of supply last year, this is another indicator. In November 2024, we only had 3.5 months of inventory, which is a strong sort of it's a seller's market. Anything under 4 months, as we all know, is a seller's market. So we were actually in a seller's market last year, believe it or not, right? So, and but now we are 4.9 months of inventory, which is slightly more than 4.5, which was last month, which is again seasonal. The number of months of supply normally goes up in November, December, but I think it's going in the right direction. And we'll again discuss that later on in the session. So this is showing where we are. We are definitely in 2025, we were way above the normal months of supply for GTA or Toronto area. And we actually, at one point of time, we were more than 30,000 homes available to sell. And now we are down to probably about 25,000, so like what 24,500. So which is going in the right direction. As you could see, now it's actually ticking down, which is a good number, right? Or good direction. And this is the average sale price. Yes, the average sale price is 6.4% below last year. Again, as we discussed, last year was again a strong rebound market. Now, considering what's happening in the market, is still a very strong number, right?
So
So, which
do you
is,
want to talk about this after, or you want me to give a little bit of a analysis?
let me quickly complete this, and then we
Perfect.
have a lot of
Okay,
questions to
great.
ask you.
Okay, good, good, good.
And we would have all these questions there for sure. Yeah, thank you, Jeremy. And yes, this is again November numbers here showing we are somewhere near the top. Like as far as the price is concerned, we are still in a very top, right? It's a very slightly up and down from last couple of years. If we forget about 2021 or 2022, we are in a very strong market still, price wise. And this is the pricing for the last 14 months in a row. So if you look into the last 14 months, we are almost similar in price right now that we had in spring of this year, right? Because spring was weaker. We had a very strong summer and fall, but spring was very weak this year. And we are about the same price, which was in the month of like springs, March, April. So anyhow, let's look into quickly what Remax has to say where the market would be next year before we dive into the discussions. So Remax highlight is that we are going to expect a strong rebound in number of sales. We will have better number of sales next year, 3.4% more sales as compared to this year, but the prices they are saying would be weaker, right? But keep in mind, this is average price, which includes all condos as well as houses, as well as different type of houses and different neighborhoods. And this is not only particular to one neighborhood. So if you want to have a more predictions of Remax even for a particular neighborhood, there are certain slides like this one, which we can discuss with you. Please contact us and we can give you more detailed information about any particular neighborhood or any particular segment of the market, because every segment behaves differently and every location behaves differently, right? And what is Royal LePage predicting for next year? Again, Royal LePage, which is another big company, they are saying the prices will tick higher in 2026, right? Again, they're also expecting higher number of sales, but this is Canada-wide. For Toronto, they're also expecting similar results that the prices will drop 4.5% by the end of 2026. Again, we'll see how it goes next year, but we'll quickly review it. This is a very interesting statement from Phil Soper, who is CEO of Royal LePage. He said, this is the longest period of time in this century where the cost of borrowing has decreased, the wages and salaries have increased, and the home prices have softened. In other words, normally when interest rates come down, historically prices always go up. Right now, we have seen such a big drop in interest rates, but the market has hardly moved up. Actually, it has moved down in prices. So the prices have softened even if the interest rates have gone down, right? So which means we have improved affordability now. So this is a very good opportunity for buyers, especially the first-time buyers. And I could not agree more with Phil, right? So we'll discuss that point again with Jeremy as well. Now, you know what, without further ado, let's dive into our one-to-one discussions, Jeremy, and we'll look into that. And also, we'll ask our mortgage experts their opinion about the interest rate. And then, if you have any questions, please feel free to contact us and we'll look into that together.
Okay.
Now, let's dive into our topic here. Uh, Jeremy,
Yes,
let
sir.
me first give a quick introduction about Jeremy. So, Jeremy, you come from a family of realtors. Your dad was Richard, very nice gentleman, to be honest, and I have worked with him for so many years. He's now retired, but he started working on ground in 1970s, if I'm correct, right?
Yes.
And then he set up his own brokerage, and
You
now
know,
we are,
if I can give you a 1 minute lesson in real estate ownership from my father,
yep.
how they got into real estate. My dad was in electrical engineering school, and he was sent some money from back home to invest in some real estate. And they bought up houses and they turned them into rooming houses, renting rooms for $25 a week. And they bought houses in Forest Hill and in south of that on Brunswick and like the best neighborhoods in Toronto. We didn't know at the time they would be the best neighborhoods in Toronto, but they bought all these properties, and of course over time they needed the money. They did things, they sold properties for 70, $80,000, that if they did nothing else, if they just swept floors and held on to the properties, they'd be doing phenomenally well. They've done well in other things, but and bought up real estate over time. But if they just held on to those initial properties, would have been good. And that's the lesson with which I operate, and I look at things from perspective.
Wonderful. And of course, your uncle, Alex, who's still very active in our real
Yeah.
estate industry. So he's also in real estate since 1970s, right? And if I'm correct, he was also an engineer with IBM.
That was Richard. Richard
Oh,
was
that's
an
Richard. Okay.
engineer with IBM. Alex, interesting. Alex got into real estate, and maybe this is why my dad got into real estate as well. My dad became an engineer with IBM. Alex did the real estate deals for the family while he was going to York University, and this
Wow.
is in the 70s. And as a real estate agent, just doing those deals and a couple more that he found, he made more money than my dad in engineering. So they got into real estate.
Okay. Makes sense. And so real estate is in your blood, right? So
Yes.
you're born every day you were having your parents or your family talking about real estate. So you learn so much about real estate from your own family, right? And everybody I know in your family is in real estate.
Yes.
So real estate, you breathe real estate in and out. So
Definitely.
that's about Jeremy's background. Now, coming to the state of the market, right? Real estate market right now is in real shambles, as many experts put it, right? Do you see it coming back and when?
Sure. I do think so. I think the fundamentals are better. I actually really like where we are. And the only comparison I can make from where we are today to a recent time was in spring of 2022. That was the peak of the market right before interest rates started going up and prices started going down. It was really hard to get sellers to list their property. There were a lot of people who needed to sell, and inventory was so low because people believe if I just wait 6 months longer, I'll get more money. And unfortunately, everyone becomes a gambler at that time. And I do feel like it's a similar situation right now where buyers are saying, "Hey, if I just wait 6 more months, I know I'm going to get a better deal." And I think we're having a little bit of a hangover. I think the market should have been better by now. Unfortunately, January was a good month. February was the first time February did not exceed January sales. And that was because of the announcement of the tariffs. And that really put a fear into people. And so I think we're living with that hangover of a terrible spring market. Sam, you and I talk about when that volume is the leading indicator, meaning the number of sales has to go up before prices go up. And if the number of sales goes way down, as they did in spring, then we're going to have a hangover and a leftover decrease in price. And so we're facing that decrease in price now, where a lot of sellers who couldn't get offers are fighting with buyers who think they're going to get a better deal. But that being said, agents I'm speaking to are all dealing with offers on their property. They may not be good offers, but they're offers with real buyers out there. And so I am optimistic about where we're going. I think to your point about affordability, I think prices have come down enough, rates have come down enough for affordability to be really the best it's been in several years. And as you said, if that Phil Soper quote is great, because it does indicate that the economy is doing better than the real estate market is indicating, even with lower prices, lower interest rates, and better deals. But if you ask your friends, should I buy real estate now? They're all experts and they would all say, no, don't buy now. And so if they're all saying, no, don't buy now, I think it is a great time to buy. And I think we're dealing with really a trauma that we're still enduring from the panic of the tariffs being put in. And I think we would have been on a better trajectory if not. So now maybe the golden moment to buy.
Fair enough. Very good. Now, would you put a timeline? When do you think the market would turn around? I know it's very difficult to put, but what are the indicators? Because we want to make a educated
Right.
guess. We just don't want to give personal opinions.
Yes. So the thing we look at, Sam, you mentioned it just now in your slides, is months of inventory.
Yeah.
And so I'm looking closely at months of inventory and I'm thinking to myself, if and I believe that most sellers who needed to sell, who have to sell, are on the market or they've tried to sell or they've already sold. So a lot of inventory has been taken up. We right now have 24,000 listings on the market or so. If spring does not come with a whole huge amount of influx of listing, I know it's a little bit of an if, but I believe we're sort of there in terms of people selling. And so if inventory goes down a little bit and sales go up and we have a good spring because these people who are trying to buy are buying, and we might reach somewhere in spring of close to 8,000 sales, we might end up with less than 3 months of inventory in Toronto for the first time since 2022, I believe. And if that's the case, I know the predictions of prices easing even a little bit more, and sometimes that's a math trick because the price currently is lower than the year average. So, right, so November prices were already lower than the average for last year. But in a month over month, I can't see prices being lower than they are this time next year. So I believe sometime in late spring we'll see a little bump up in price, maybe similar price in summer and fall. I do believe, despite what Remax says, I know Royal LePage is saying it. I believe in at least Toronto, prices are going to be up 3 or 4% as of fall of next year.
Very strong prediction. Thank you. I think we always say we don't have a crystal ball. That's a common saying, right? But I believe we do have a crystal ball. Our volume is a crystal ball, right? If we look only in the volume, don't worry about the pricing. Because as we said, price is always volume is a leading indicator, pricing a lagging indicator.
Right.
So as a realtors, we carry that crystal ball because we look into volume every day. And just for everybody's knowledge here, Jeremy does once a week a session for a realtor agents, where more than 100 agents join every Monday. It's called Mondays with Jeremy. And he has already done 50 sessions this year. So one session every week, which is great, as you could imagine. Without fail, he does this session. Doesn't matter whether he's on vacation, whether he's sitting in, say, Vegas or sitting anywhere on Aruba or anywhere. He does session from everywhere. So which is a commitment. We appreciate that, Jeremy. And that's where we can predict based on our volume, right?
Yes. Yes, exactly. So there are two analogies. If you're eating healthy today, the scale is going to still show that you went to holiday parties last week. That the volume you eat today is how much you're going to weigh next week, not this week, right? So before prices adjust, the volume, the number of sales has to adjust. The other way to look at it is a slow moving ship. You put a big ship through the ocean, they can turn everything they can turn, Got it. Back on.
Yeah. Thank you.
So a ship moving through the ocean has momentum. So it's going to go in the direction that it's moving. And so the volume is our momentum and it's telling us where to go. So even though we have a couple months of lower volume right now, overall, our volume is starting to increase. It's increased dramatically over 2022 in fall and 2023 in fall. And so we're heading in the right direction. And by the way, Sam, those predictions on volume, I'm not sure if they're Canada wide or the GTA, but I do believe volume for our market is going to be up next year about 10% to 12%. And the reason is because we're on a trajectory right now to have about 6,000 sales on average per month, conservatively next year. I think in spring it's going to be higher. And if that's the case, just the shortfall in sales of spring of 2025 compared to the spring of 2026 will lead to a 10% increase in sales without much happening, without much changing. And that's going to be positive news and positive momentum. And so I really think that that's going to look good and that's going to help drive confidence for buyers, which will lead to that little bit of a price increase I talked about.
Wonderful. Great. You know what? I think Neelam wants to ask a question to you. So, Neelam, go ahead.
Hey, Neelam.
Yeah. Good morning, Jeremy. Actually, some people they are very hesitant to buy the condos. And what do you think about that? How we can convince them to buy the condo? Because we all know it's a sale on condos, basically.
Right. So, yes, one of the beautiful things about our condo market, even though in the short run it's terrible, is that condos are pre-sold, as everyone on this phone call knows. So if they can't sell condos, they can't build condos. And the beautiful thing about that is there are really no starts to buildings from mid 2023, 2024, 2025. There won't be any starts of condos in 2026 or 2027. I can guess what's going to happen after that. But that's really 5 years almost of no starts to condos. And if you listen to what politicians talk about as their fear in real estate is a shortage of properties. And what we've seen is a drawdown in investor owned units. And so there's more stable owner occupied units. And so if we look down the road, and by the way, one other thing that happens if any of your people on here today have been trying to rent out a condo when the new building next door is just completed and there are 50 units for rent, their rent automatically goes down for the short run until that all that's taken up, right?
Yep.
So they end up with less rent, even though the market's stronger. That's not going to happen in 2026, 27, 28. Those rents are going to start to go up because they're going to match the natural rent that it should have been at without the interlopers of the new condos. And so as completions start to dry up, which they will in 2026 and onward through the rest of the decade, I'm predicting that by 2030 we are going to have a mass shortage of property worse than we had in 2022 and 2023. And everything that the government is talking about, trying to increase supply, if you listen to them, they're anticipating this same problem. And so, again, if you look at it from a long term perspective, you can expect if you buy something today, you're at a price you didn't imagine you'd be possibly buying even 5 years ago, you wouldn't believe you'd buy this price. Pre-COVID prices,
Absolutely.
you are getting rents that are going up and increasing, and you're entering a market that is not increasing in supply for at least the next 6, 7 years. And so, with all those factors, I really am bullish in the 5, 7 year range on if you bought a condo today for 500,000 on a one bedroom. I think they're going to be booming 5 or 6 years from now. And the bonus of it is they couldn't even build if they wanted to a unit that you're buying. So you're buying for cheaper than construction price. And all of those factors together make me optimistic.
Fair enough.
Mhm.
You know, on the same topic, there's another factor which we have to keep in mind is population.
Mm.
And there was a big news this Wednesday when, for the first time in many years, Canadian population has gone down for a quarter by about 75,000. What type of impact would that have on our real estate market? And where do you see it going further?
Yes, good question. I think that's a blip. I don't think that's long term. I do think there are people who are starting to say that Toronto became a little bit unaffordable. Uh, Canada maybe doesn't feel as stable as it felt a few years ago to many people. I think our excessive we had excessive immigration and unchecked immigration. I don't think we had smart immigration policy. I am in favor of large numbers of immigrants. I do think we have to be slightly selective, and this gets into territory that doesn't sound very Canadian, and maybe that's part of our problem. But we started to go away from favoring wealthy, educated immigrants that were wanting to come to Toronto. And part of that is the foreign buyer tax is something that in times of excessive, in 2021 and 2022, maybe we needed it. Right now, we would benefit greatly from people who want to move to Canada and stabilize their lives in Canada and buy a home, but they're told they can't buy a home, they have to rent or they have to do something. And I think people are looking elsewhere when they have money. So I think we're looking at a rebalance of who our immigrants are. I do think in the very long run, immigration to Canada will still be high. I do think we're still looked at in a world of war and uncertainty as a place of stability. Canada is a great place for the long term. It's a great place to raise your children. And there's limited area, even though we have such a vast land, there's only a limited amount of space where people really live. And so I think the immigration will come back quickly. I think we might be in for a year of much slower immigration or maybe negative. I was surprised about that too. But I think we're going to be good in the long run. If that changes, then there's a whole new formula we have to look at the real estate market. But I think long term we'll come back to normal immigration.
What's its impact on the pricing? Especially, we know the rentals are going down. Probably one of the reason is less immigration. And do you think the pricing will remain subdued because we are having lesser immigrants coming to the country?
I don't think it's a long-term trend, and I think the lower rents are due to a short-term situation where more people are renting out their basement to cover their mortgage. More people are renting out properties that they would otherwise have had vacant. More people are saying, "Let me stay home and live with my parents because my mortgage is too high, and I'll rent out my house." So I think that's those kind of factors are really factoring into the lower rent more than the short term lower immigration. As we say, if you listen to the politicians, they're still talking about the housing shortage we have based on the trends we have. I don't think there's going to be a run on people and all of a sudden Canada is going to be uninhabitable. Luckily, we have a great political system. So if our politics of the moment are not good, the political system will override. I do think we trended too far in a liberal direction, and I think we're going to move in a conservative direction. We'll talk a bit about Bill 60 in Ontario and the impacts of that. I think, and by the way, I'm a very centralist person. So whatever your politics are, it's just a question of where we're trending, in what direction we're trending, and for too many years, I think we had the wrong policy in a lot of areas. Maybe a lot of people will agree on the call, but maybe some won't. I don't want to get too much into politics.
Okay.
But the moral of the story is we have to balance out somehow.
So you see this as a temporary shift, not as a permanent change.
Absolutely,
Okay.
absolutely.
You know what? I remember I just attended a few days back Richard Robbins' mastermind session, and Bentall was there. We all know Bentall. My audience here also know Bentall very well because I talk about Bentall almost every time, right? He's
Great.
very respected economist from CIBC. He brought up a very good point, which I just want to bring up here. He said, who are our buyers? They're not the immigrants who are coming here now. He said, average or buyers are the immigrants who are already here from previous 5 years,
Mm,
right?
absolutely.
He said, because anybody who comes to Canada for first 2 or 3, 4 years, they are setting up their getting the immigration done, they're getting their permanent residence done, they're getting their jobs settled. So he said, right now, those buyers who came in 22, 23, which was a huge number,
Mm,
they would be actually jumping into the market by 26, 27, because it takes that much time for those buyers to start buying. So
right.
we should be having a huge influx of first-time buyers now, because we had a huge influx of those immigrants who came to Canada in 22 and 23 when we had the highest immigration.
Yeah, it's a great point that the move up buyers. The other thing is, I know Benjamin Tal often talks about this as well, that the number of people we really have is significantly higher than the official numbers of immigration.
Yes.
So a lot of our potential buyers, a lot of those downline buyers, are not kids who came to go to university here. They're people who brought their parents here. They're people who said, I'm going to move in with my cousins for 6 months, and they stay, and then they get a job, a basic job just to make it until they can start to move their assets over and everything. And so we have we have over full houses that will move into, even if we don't have new immigration, we're going to have those people move into houses as well.
Yeah. He asked a question to audience in that session. He said, which country the most permanent residents come to Canada? Everybody started thinking different countries. You know what? And his answer was finally
What
Canada.
is Oh, sorry, what country are most
Within
people coming as permanent residents?
within Canada. He said because the people who are getting
Oh,
PR are
yes,
within Canada. The
within
people who
Canada,
are
yes.
already here from the last 3, 4, 5 years, they would
Yeah,
be your next PR. And
right.
we are, and which we, I couldn't agree more, because that's true, right? People who are here for the last 3, 4 years, they're all now getting PRs.
Right.
Then they would be our new buyers.
Yeah.
So yes, there's a
And
good,
these are the small families living with their sisters, cousins, things like that, that are trying to get a foothold into the market and make it and grow. So we still have years of that left within us.
absolutely
But I do think people will still move to Canada. I think there, temporary shifts in world economies and things like that lead to shorter immigration, but I don't think that's a trend long term.
fair. Thank you. Haji, he wants to ask another question now. So Haji, go ahead, please.
Hey everybody. Uh, Thank you. It was very good review, a year review. 2025, 2026 is up for, as Sam said, nobody has the crystal ball, but at least it was very clear um, predictions, or at least your expectation. But do you think the government, like the current government, would get rid of the foreign buyer tax based on what Sam says, the immigration with it? Because we have a couple of clients Sam knows within my family that came from Afghanistan, and then during the struggling of getting their permanent even under protected status, they can buy without paying 25% tax. Do you think they're gonna change it soon or no?
I think we need a change of government to do it. I think a new government will do it. I don't think Mark Carney will do it. That's my belief. I don't know. Who knows? Maybe he will. The unfortunate thing is when they're making this policy about foreign buyers, they're imagining a Chinese billionaire who's buying 15 houses. But like you said, they're just families. They're in a lot of cases they're families. I was at another real estate event, and there was a woman there who's she's from somewhere in Eastern Europe. I'm not sure where. And she says she has done rentals for 4 families that have come to Canada, moved all their assets, somewhere in the $1 to $3 million worth of assets. They've moved to Canada and they would buy houses, but otherwise they're renting.
Hmm.
And so those people are not stable immigrants because they don't have homes. If they bought homes, if they invested in Canada, but if they're sitting with their money, and I'm not sure where they sit with their money, it's easily movable to anywhere in the world. And so we need to capture that money and keep it in Canada. And those are the people that should be buying and filling the gap right now. Unfortunately, we make policy a few years too late all the time. So there are people sitting with money who are renting who should be buying and owning, and it's just not happening. So there's room for growth. So in my time in real estate in the last 25 years, uh, things have happened. Like we had 40-year amortization on mortgages for a little while, and that went way down. We had no foreign buyer tax. We had low land transfer tax. These are all levers that the government can and at some point will pull, probably just a bit too late. In the when they introduced the first foreign buyer tax in 2017, it was right as the market was slowing down anyways, and they pulled the wrong lever at the wrong time. What I feel like they're going to do is pull the wrong levers at the wrong time here. And just as the market's starting to come up, they're going to ease restrictions on foreign buyers. They're going to increase amortization rates. They're going to decrease the stress test so more buyers can afford property. They do all these three things, and it's like throwing kerosene on a little fire, and we could have a runaway market that no one's predicting.
Fair enough. On the foreign buyer itself, you know what? There's an interesting case study in Australia. They have removed foreign buyer tax on new construction
Oh,
s-
interesting.
so that people can buy new construction, which will help to boost their new construction. I think that could be a good start for Canada.
Right. But 3 years ago, that would have been putting kerosene on the wrong fire, right? That
Yeah,
would have been, but now that makes a ton of sense. And if you had some foreign buyers, some foreign money buying up these condos and letting people rent them and use them, and I don't mind the vacant property tax in Toronto, although I think it's poorly implemented. I don't mind that tax because I think it encourages the rentals, and I do think that's good. I think there weren't too many, but there were enough units. And by the way, that increased the rental supply as well. So at a time where the market was in trouble, we said, hey, everyone, if you don't rent out your house and you don't want to keep a rental, get it on the market and sell it right at the wrong time. So another lever they can pull.
absolutely. And while we're talking about these rentals, I think it's the right time to talk about Bill C-60.
Sure.
We as a landlord, and we have a lot of investor in our database, in our clients, like many of them are here, and they're all feeling the pinch because of rental is going down right now,
Mhm.
right? And it's very difficult to find tenants these days. Now, and many of them, they don't want to be landlords anymore because of whatever rules we have in
Right.
Ontario. So we had this new Bill C-60 by the Ford government. What do you think? Is it the right step in the right direction? And what are your take on that?
Yes, I think the landlord tenant board has gone too far. It is too easy to falsify applications. It's too easy to stay and not pay. It is too easy to extort your landlord if they're selling the property. For all these reasons, I think Bill C-60 is a great start and a great flag waving to say that, hey, the tenant is not the only one that matters anymore. And so I am happy that this is happening. Bill C-60 has two parts. It's got the part about rentals and shifting things. It does shift things a little bit more in favor of the landlord compared to where it was before. And so that's controversial in a world where we advocate for tenants all the time. We are evil people on this call talking about real estate and owning real estate. But I do think that it shifts a little bit in the direction of the landlord, which makes it more fair. And the other part of it is decreasing development charges so that maybe new construction can happen a little bit because they're decreasing development charges and stabilizing development charges. I think that's probably important. But the big thing is um, tenants cannot run amok anymore with Bill 60. I think it will make a difference, and I think it will help landlords do their job. Um, Rent is relatively high for people who are trying to rent a place on their own as a single person renting a condo in downtown Toronto. Sure, rent is high. But for the most part, we are relatively affordable still in Canada. There are options and places to rent, but landlords are discouraged from renting properties because it's so difficult. And so poor qualifying tenants have a hard time because landlords would rather sit vacant than bring in someone who is less than perfect
Yep.
because we've all heard a story about someone who has someone stuck in a property too long. So I do think that shifts in the better direction. And I think this is something that may even contribute to increasing supply of rentals because landlords will feel a little bit more comfortable renting to that marginal person.
Fair enough. You know what? In our brokerage at Real Realty team, we do a lot of rentals as well because we have a lot of
Mhm.
investor clients. We,
Yes.
like me, Haji, and Neelam, we do probably more than 50, 60 rentals in a year. So we are aware it's very difficult to select a tenant these days because you don't want to go wrong. You want to check so many boxes. And sometimes the tenants, even a fair tenant, it's difficult to believe them
Yeah.
because of bad tenants, because there were so many. Even one bad apple can spoil the whole, you know, batch. So that's what was happening. So I believe you're right. It's the at least a step in the right direction. It will take time to fix it, but that will bring back more supply, as you said, for rentals as well.
And by the way, sometimes it's not the bill that does it. It's the landlord tenant board and the people within the landlord tenant board or the whoever's making these decisions saying, "Hey, they're starting to watch us on the other side. We can't just do anything we want." You
Yeah,
know, there are rules. If the landlord calls the landlord tenant board, they get an angry person on the other end who says, "Well, you can't do this for your tenant. You can't do this for your tenant." If a tenant calls the landlord tenant board, they can give them 100 suggestions. Why don't you try this? We can help you with this. It's really just aimed at helping tenants, to my experience. Maybe I'm overly pessimistic about it. But
yeah.
I do think just the sprinkling of an idea that, hey, you can't just do whatever you want will make them shift a little bit and manage things a little bit better.
Fair enough. No, definitely, I believe the same. It's a step in the right direction, and hopefully, it will bring more balance to the market. We don't want it to shift in one direction, either
Right.
landlord favor or the tenant's favor. It should be a balanced approach, and
I
people
agree with
should not be able to misuse it and extort money, as you said. And I have gone through a couple of sales where we have to pay the tenants exorbitant amount of money as cash for keys,
you.
but
Yes.
just honestly was wrong.
And by the way, it's the right thing to do it because there's no other way. But that doesn't mean the legislation is correct.
That's correct. That's right. Yeah. Fair enough. And coming back to opportunity, as Phil said very rightly, I say that it's probably the one of the best time for buyers, especially the first time buyers. Do you think this opportunity is going to stay there and for how long?
Let me say this again to go back to 2022 at the peak of the market. At the moment where people said prices are going to go up forever, it all changed. And I think right now we're at a point, go ask 10 people, are prices going up or are prices going to go down? And 10 people on the street, out of 10 people on the street, will say prices are going down, don't buy real estate. And what that means to me is that those people that are buying right now are only the people that need to buy. A ton of people are delaying their purchase. A ton of people are saying, let's wait and see. Maybe we'll get a better deal. Maybe prices will go down. Let's at least see what happens. It is very hard to buy low and sell high. And so the question is, who should be buying right now? And if, where is it going in 6 months, in a year? Can we maintain these low prices? I don't know for sure that it's going up, but I know that at the bottom, it's not going to feel like it's going up. And so right now, it feels like everyone says prices should go down. Everyone's saying wait for a better deal. Everyone is saying don't invest in real estate right now. What a great opportunity to invest in real estate right now. I can't guarantee if you have someone on there who says I'm going to buy a condo and flip it in 6 months, I think that's a high risk maneuver.
Yeah.
That's not what we're in it for. But Sam, you and I have a long-term perspective on real estate,
Yes.
and I know that people who bought in 1992, 3 years after the peak of that market, did extraordinarily well, even though it really took another few years for everything to come back to gangbusters and quick growth. So I would tell people not to hesitate and wait to see it being too late, particularly It's one thing for investors. If you miss this one, you'll buy next year. There are great opportunities. Yes. You can negotiate better deals. Yes. It is a great time right now. But for move up buyers, for people who are living in a house and their dream house around the corner is on sale, the moment you miss the first one, it's gone and too late. And so there will be people who 10 years from now brag to their friends about what they paid for their house while their friends are living in houses half the size because they didn't take action in 2025, 2026. And I think right now is that beautiful move up opportunity for people who have a long term view on things. I think right now is great. And I think the moment something sells on multiple offers on your street, it all changes. So get in now.
Yeah. As Warren Buffett says, like very well, you should be greedy when people are scared,
Right.
right? So right now, most people are scared. So I think this is time to be greedy. If you want to buy something now, you can get a much better deal. You can negotiate better. You can search around, find the right property. Don't have to have that pressure of being priced out or kicked out by someone else from this deal. So there is so many good points right now. So I think this is the right time for people who are waiting on the sidelines to start jumping now before everybody jumps.
Right. And if you're active, if you're looking for something, ladies and gentlemen, the mistake people make right now is they're spending time on realtor.ca or wherever they're looking for properties and they're looking at the price. Don't look at the price. Call Sam and his team. If you like the property, they will negotiate, and the deals you can get right now are incredible.
Yep.
So, not to say that every property can get a great deal, but there are deals to be had out there. There are people who right now say, I need to get my property sold. I need to be out of here. I can't believe it's December and I haven't bought. There will be someone who sells their home on Christmas Eve. There will be someone who sells their home on New Year's Eve. And those people who buy those properties will get great deals. If you're looking at a property right now on realtor.ca, call Sam and say, hey, Sam, let's go see this house and let's see what deal we can get on it. And you'll be surprised what a great deal you can get. And then on the flip side, when you're selling, if you price it correctly, if you do a good job marketing, if your agent's professional and they do a good job, you can do okay. You can do pretty well and you can do much better on the buying side. And so that's the real opportunity right now. And Sam, that's why I'm here with you this morning because I know you and your team manage these situations so well. You're so great for your clients. You know how to take advantage of opportunities. And right now is a time where the agent you choose matters so much. And so, anyone listening to this right now, you're in the right place with Sam and his team.
Thank you, Jeremy. You know, if anybody have to ask for advice, what will be your advice right now for one piece of advice for buyers, one piece of advice for sellers, and one piece of advice for investors?
Okay, so great. So, I think I gave the advice for buyers. The advice for buyers is don't look at the listings, go see the houses. Forget the listing, go see the houses. That's my advice for buyers. For sellers, my advice is spend a little bit of money on your house and commit to selling. That means don't be half in. What a lot of people do, what I see a lot of there, and the reason we have so much inventory right now is because people think, I'm not sure if it's going to sell, I'm not sure if it's going to work out. So if that's the case, there's no point staging it. If that's the case, there's no point repainting the front door that needs to be painted, not this time of year, but whatever needs to be done. Do the work. If you're selling, commit to selling. If you're staying, commit to staying. But if you're going to sell, price it really well, get it on the market, and do a good job getting it sold today. Don't try and hit a home run. Take your base, do well with it, but don't half sell your house. There are too many people who aren't really serious sellers because they don't believe they'll get it sold. If you're serious, you'll get it sold. That's my advice for sellers. And the last one for investors.
Yes.
For investors, the Warren Buffett advice: be greedy when people are
Yeah.
scared, and be scared when people are greedy. There's no better advice than that. But more so from a mentality point of view, if you don't have to sell your property, the price doesn't matter. So continue to buy property that you never have to sell. Continue to invest in Toronto. Continue to look at the return you're getting on your money on a cash basis. And if the cash basis is decent money, if it's covering inflation or getting you better money at the bank, the long term look from where we are right now is unbelievable. And the last piece of advice I'll give to sellers is do not make decisions based on the price you paid. That price is gone. Make decision on today's price. And so what happens is people bought a condo for 600, now it's worth 500. And they say, "Well, it's 600, now 500. How do I make a decision? I've lost 100." If you need to sell, you got to take the 500. If you don't need to sell, it's worth 500 today. What is the upside of it? And so if don't give up on your investment. Many people will get bored of their investment. They will sell it at the wrong time. It's not sexy right now. I understand that. Hang on to it. And then one day someone's going to say, how on earth did you ever buy that property?
Awesome.
What's the advice?
Awesome. Great. You know, I would like to ask now our mortgage brokers, we always do it on our calls, to their point of view about upcoming like interest rate adjustments. But now I would ask them, where do they see the interest rates going next year? Right. And especially when there's one bank, I think most people have heard or might have read that Scotia Bank is making a prediction that the interest rate may go up next year by 50 points. Whereas most banks are still saying it may go down or may hold. So let's check with our mortgage specialists. What do they feel and where do they see the interest rates going next year? So if Kishore, if you can answer first, and Prerna and Amit and everybody, and please be brief. We want you to give chance to everybody. At the same time, we want to have a good opinion from you guys. Thank you.
Sam, my take is I think we've already hit the new normal. We're kind of back to December 2019 levels, right?
Mhm.
And yeah, we got spoiled with super low rates for a long time, but this is the new normal. I think we've hit the new baseline.
Fair enough. So you're saying we are about the bottom. This is going to be the rate,
Correct.
and
Maybe
we
the variable rate, prime rate might come down once or twice over the next 1 to 2 years, but in terms of fixed rates, I think this is the new normal.
okay. So variable rate may still come down.
Correct.
Fair enough. Thank you. And Amit, you want to take it? Amit?
There we go. Sorry, I couldn't unmute there for a second.
Oh, sorry. Yeah.
Kushore, he's made a comment that we're back to the new normal. We're back at 2019 interest rates, pretty much, is what he's saying. And we saw how the market was then. So what Jeremy has been discussing the entire time, I agree with him that we should have more buyers coming into play. But what's happening is that we're also factoring in the uncertainty of down south and the unemployment with the federal job that was just announced. Job losses are it's going to occur over the next 6 to 12 months. We know that each decrease or increase in rate takes 6 months to feel the impact. So for January till June, I think it's going to be a hold until we actually get the true numbers of what's been impacted. And I think that we'll probably have potentially, if we get those true numbers that we should be seeing, we'll probably have another 50 bips drop from the BOC in that time frame there.
Fair enough. Good. So we are still hoping for a drop in variable rate up to 50 points, you're saying. Okay, fair enough. Prerna, do you want to jump in?
Sure, and I totally agree with what Kishore and Amit said. There will be rate hold. but second quarter maybe we can see a little bit dip of 25 basis point or so. There won't be much changes, and obviously it depends on if there is a economic shock happen in in the country, then it's a different story. But it will stay stable.
Great. Thank you. And Bhavin, do you want to please comment?
Hey, Sam. Yes, I think I agree with everyone, but it seems like for REITs, Bank of Canada would be on sidelines for much of the next year, unless something changes with the NAFTA, meaning Canada, Mexico, US agreement that might change the economy. But I think for now, I'm looking at a lot of commentary from a lot of lenders. They're saying they'll be mostly on sidelines next year.
Perfect.
Sam, let me just say, sorry to interrupt. Bhavin, you
Sure.
have a great point. We haven't even discussed the possibility of a new trade agreement which decreases or takes away the tariffs. And imagine what that does for the economy and the psychology of Canadians. Would really change things a lot quickly. We haven't even talked about that at all. I don't know if it will happen, but
Oh, definitely. You know what? That's the elephant in the room, which no one wants to talk about anymore, the tariff. So I think the good thing is if we haven't even talked about tariffs on this call so far, that shows that people are now getting immune to it.
right.
It's a good thing, right? So great. Thank you. Thank you for that input, Charmi. And Hamid, do you want to give your opinion quickly on interest rates?
Of course, Sam. Already great points been shared. Thanks, Jeremy and everyone else. I think there's a lot of great potential in the market. One thing that we're still lacking in the market is confidence. And not having the market confidence, not the buyers feeling or the investor feeling confidence. I think part of that comes from the US side. Unfortunately, the government of Canada is not that powerful as they are in the market, which is pretty unique in this case. But I think it's gonna drop even more because the government needs to restore that confidence into the buyers. And even if there's a lot of potential, nobody's gonna take action if they don't feel confident. At the end of the day, we take our decisions emotionally, and if those feelings are not there, the actions will not happen. So my take on the interest rate is probably, depending on the level of confidence in the market, it's gonna drop even more next summer, so people can start to take action because that's the goal for the whole dynamic in the market, I believe.
Awesome. Great. Rajat,
Yes, hi Sam. So I think the interest rate is gonna be hold. They're gonna hold the interest rate. Points are if the job numbers are stronger next year, they're gonna hold the rate for sure. And I think the BOC, Bank of Canada, views that the current rate is about right level to balance the growth and inflation. So yeah, I think it's gonna be hold next year.
okay.
But
So you're not expecting
yeah.
any drop next year.
No, I was expecting this month, but Christmas is over, New Year is over. I don't think so. It's gonna be drop. Yeah, all the banks are saying they're gonna maintain same. But yeah, Scotia Bank they said that it's gonna be increased 50 basis point. So let's hope not.
I don't know where they got this data from, to be honest, right? Jeremy, do you think there
I
will
don't
be an
know.
increase?
I don't know what factors are they saying are going to be so hot in the economy that are going to allow this to happen. I don't see it.
Jeremy, I
I
have a
think
question about this bank's predictions. I think they're mostly doing these reports to push people to fix their rates, or they're kind of biased, if you
So
can elaborate on
it's
that.
interesting. I don't know for sure, but I forget his name. He used to be the chief economist for TD Bank. I won't remember his name, but he spoke to us maybe around 2010 at the office. And he said, you know what? Everything about my predictions goes with a grain of salt. And the grain of salt is everyone doing my research is a 24-year-old kid who thinks they'll never be able to afford a house and they're hoping to some point get a house or they're angry with the people who have houses. So this is how the predictions are being made. They're not being made by the top guy, by Benjamin Tal or by any of these top guys. They're being fed information from different sources. So I don't know where they're getting this information. One thing I do know and I realize that the housing market does not factor into the decision of interest rates at all. It it is such a big factor and it really works into things, but the government is not going to adjust interest rates to try and stimulate the housing market or do anything like that. It is just not how they factor it in. They're factoring it on macroeconomic factors that are external. So we're a price taker, we're not a price maker.
Fair enough. Prasun, he raised his hand. I think he wants to ask some question. Prasun, go ahead, please.
Yeah, Sam, actually, I've been listening and you really made a good presentation. You always do. And I was listening about the movers, like the people who have already moved in this country like 2, 3 years ago, and then they wanted to be the buyer. I'm just trying to understand actually what is the family income in Canada of new immigrants, number one. Number two, if that income can qualify them to purchase a home right now, and how much they can buy if they have a good credit. Number one. Number two is I have seen a lot of my clients in a position that without their parental down, can say like money down into the
Compliment, yeah.
purchasing the real estate, the kids cannot afford it, right? So there are some situations where they book the property like 3 years ago, say for example $1.1 million. When the closing happened, the price gone down to $900,000. Kids moved to the property. They were living in a rental property, paying $225, $2,600. Now they have to pay $5,000 as a kind of a mortgage payment, and still it is a negative balance. Like market price is 900, they bought it 1.1. So when this kind of situation will reverse? Because this is becoming a very, very talking point among my clients that they are saying, you know what, Prasoon, I'm done with real estate investing. So when we can see this turnaround happening?
Jeremy, do you want to take it?
Yeah, I smiled a little bit there at the end because to Warren Buffett's point, I smiled a little bit when you said a lot of people are out there saying, I'm done with real estate. They bought a house, it's gone down in value. The lesson that they should not take is real estate is not an investment. To quote Tony Robbins, they did the right thing at the wrong time. And so when you look at those numbers and the way those people are paying, there are a lot of people that are hurt. And there are a lot of people, unfortunately, that will take the wrong lesson from this and get out of the real estate market. That includes people who purchased pre-construction property in 2022 and they're hurt by it. It hurts in the short run. But if you're a 25-year real estate investor, then you made a mistake this year, you got to get back on the horse and do it. And so a lot of people are saying it's not sexy, get out, get out. And it might take 10 years for people to get back in. But I'm telling you, if someone buys their house from them and rents it back to them, that person will do well. And the person who sells it and goes to rent because they're done with real estate, quote unquote, is going to be in pain and have a tough time retiring in Canada.
Awesome. Great. Thank you. Now, another point which Prasun raised is how much people would qualify based on their current income. Do they qualify? Which means affordability. Is the affordability back or not yet, right? So that's in the simple words. Maybe one of our mortgage advisors, like either Amit or Kishore or anybody who, because they deal with it every day, right? It's their expertise. If you can, one of you can jump in, one or two of you can jump in and give your advice or your opinion on that, that would be great.
Yeah, and linked to that, like how much is the family income these days of any new Canadians, like the PR?
They would be having that better numbers, right? Yeah.
So I can try and take this one. Again, don't have, so pursuing to your first point, affordability. Affordability is better now than it was in the last 2 years because everything is stress tested. As rates come down, people get a lot of their ability to qualify. But it's the second part of your question is really hard to address with the average income. Look, it might be skewed. You see a lot of professionals, especially in the IT field, stronger than average. I would say 100, 200, I mean, close to 200,000 household income because it's comprised of a two working. two individual working household, right? And affordability now is way better for first-time home buyers and newcomers than it was in the last 3 years. I could tell you that much.
Fair enough. Yep, affordability is coming back. It may not be there yet, right? But I would put it this way. If we compare, and maybe now, Amit, you can elaborate more on that. If we compare affordability of 2022 or 21, 22, when the prices were on the top and interest rates were at, say, lower point, compare, and everybody was buying. No one was talking about affordability. Compare that to now, when the prices have come down, interest rates have also come down, right? Is the affordability got better or not? And then why are people now talking about affordability and they were not talking about affordability in 21, 22 when it was actually, yes, interest rates were, sorry, lower than today, right? So now we are maybe you could get 2% interest rate. Now you're getting 4% interest rate as a fixed rate or average rate. So interest rate has gone up maybe 1 or 2%, but prices have come down 20%, 25%, 30%. So has the affordability gone better or not? Amit? Sorry, Amit.
Yeah, no, of course. So this kind of goes back to what Jeremy kind of made a comment on with Warren Buffett, right? Is when the market was hot, everyone wanted to get in. They didn't care what affordability was at that point. They just wanted in because they did not want to miss the bus. That was literally what that was there. The other factor in this, because I'm more technical, I'll try not to take up too much time, is back then the qualifying rate was 5.25. It was the same across the board for everybody. So you were using a 5.25% to qualify for your mortgage. Didn't matter if your rate was 1.5, 2.5, etc. Right now, because of the stress test, right, your interest rate is being qualified at 5.5 to 6.5 to 7%. And there's more details into that there. The other key thing also is now, because of affordability, there's much more debt that people are carrying just to survive. Line of credits, loans, right? Car payments have skyrocketed, right? So the standard rule of thumb is if you're purchasing an insured purchase, so which is less than 20% down, you can qualify for up to 4.5 times your income. That's with no debts. But then people forget property taxes have skyrocketed, condo fees have skyrocketed if applicable. So affordability now, you have those variables that are going to change it. So people are scared because they don't know when they're going to get laid off. They don't know what the variable expenses are. And no one wants to stop buying Starbucks or paying for their Netflix, right? They don't want to do that. And that's where the differential comes in, where Jeremy made a comment. But our parents were versus where we are today for the 24-year-olds. So it's going to be hard, I think, for the next 2 years for that affordability. However, it is going to get better because everyone needs a home. So it'll take time, but it'll get there.
Great. You know what? Thank you, everybody, for staying in. I know we are past our time. We are 10 minutes above already. And we want you to do our 2 draws for today. We have 2 $50 Amazon gift cards for 2 lucky winners. So I want to draw that right now because people have other commitments. And after that, there might be a couple of questions in the chat, like if someone wants to stay in, we'll try to answer those. But let us do that draw right now. And then anybody who has to leave, at least they can leave, right? So let's do that. I'm going to share my screen. We use this wheel, which we have used in the past, so everybody can see the wheel, I believe. So there, your names are here already added into this wheel. And let's do a quick drum roll and let me try to run it and see who is going to win 2 draws today. And just want to make sure everybody's name is there. I believe Mandy was actively monitoring it and she tried to put everybody's name in, and everybody who has answered to that video ask question, their name should have been in there, right? So great. Let's do the drum roll and let's do the spin. British. British, are you on the call? As a rule, you have to be on the call.
She may not be able to unmute herself.
Oh, yeah, that's something. Let me just.
By the way, I love this wheel. I'm going to use this wheel.
Thank you. Let me check. Where is.
I don't think she's here.
Let me see it. Okay, let me go back here and see. Sorry, if British is there.
Sam, you have a couple comments from Rajat and Prasoon that say their names are not there. Oh, British won last time also.
Yeah, he did. Lucky British. So, but is he there? I don't see him here. Yep, I don't think he's here. So we'll take we have to redo the draw for him as well. Whose name is there, is not there? You know what? Why today is, I don't know why it's like people are not able to unmute. Let me try one more time. Now I think everybody can unmute, right?
Yeah.
Rajat is not there. Rajat said.
Okay.
That one is the old one link. Please, can you use the new one? Which one I resend it?
Oh, you resent it? Okay.
Yeah.
Prasoon's name is not there.
Okay, so this is
Hamid's name also not
I
there.
think we can put Jeremy's name as a special guest.
Yes.
I don't need to be there.
Mandy, please add Jeremy's name. Maybe he's the lucky winner too.
No.
That's okay. Jeremy,
You can give away
nice
your
message
card.
from us. Add his name also, please.
No, that's okay. Let's do this quickly and let me again share the screen.
I'll do it again.
Oh, Probid is not there, Sam.
You know what? Let me make sure I'm just opening the right wheel, because Mandeep mentioned I was opening the wrong wheel. Okay, let's go again here. Okay, fair enough. Okay, here's the new one. Spinning.
Aaron. Wow.
Mandeep, is this the right wheel?
Yeah, I'm here, Sam,
Yes.
by the way.
Oh, Aaron is here?
Yep.
Yeah, this is
Perfect.
the one.
Aaron,
Yes.
congratulations.
Thank you, Sam.
Congratulations.
Yeah.
Great, thank you. And let's do it one more time.
Hitesh Kapoor.
Hitesha.
Congratulations, Hitesh.
Is Hitesh on call?
Yeah, she's on call, but you need to unmute her.
Yeah, I can see her name here. Yeah, okay. Congratulations, Hitesha. So congratulations to two lucky winners, Arun and Hitesha. And thank you everybody for your time today and completing the survey and participating in today's seminar. I know time is almost 15 minutes above. Anybody who needs to leave, please feel free. We'll quickly answer one or two more questions, what are we have in this session, and then we'll call it a day. So now coming to the questions, is there any main question which we missed?
Baking powder.
Prabir?
There are questions in the chat, Sam.
Okay. Yeah, Abhi is asking from investors, if the return period is long, such as 10 plus years, what's the opportunity / return cost and risk to hold it for that long? It's a very good question. Jeremy, can we answer that one before you
There
leave?
should be, in the short run, you should be able to, even if you cover your mortgage, it works out to approximately, depending on how much you put down, everything works out to approximately a 4% return on your money if you can cover your mortgage, sometimes a little bit more, sometimes a little bit less. That is a good enough return in the short run, in my opinion, to hold you to make that big cash windfall in the end, in terms of value. So you're looking at both the short run and the long run. Even if the payments are slightly negative on a month over month basis, you can still make a good return on your money in the short run just by paying off mortgage, and so that covers your opportunity cost. That's offsets the risk-free kind of rate. And by the way, another thing is, a lot of people said, hey, I'm making 5% on a GIC. I can take that money and pay my rent, and so I'll keep my money out of the housing market and I'll rent for a little while longer. And those GICs have come way down, and so that the risk-free rate is much lower as well. So you should be able to get a short-term cash on cash return, and then the equity increase is the icing on the cake in the long run.
Fair enough. Very well said. Thank you. Great. You know what? Keeping in mind, it's 11:20. We need to respect everybody's time. So I know there are a few questions which has been unanswered. So we will get answers to everybody's question and we will get back to you. And I want to thank you to everybody who participated in today's session. Thank you for being present. A big thank you to Jeremy for taking time out and giving us his great views about the market. And looking forward to more sessions with Jeremy as well going forward. And thank you. Enjoy your weekend, and we'll keep in touch. And happy weekend. Thank you.
Thanks, Sam.
Thank you.
And
And
same to you.
you know what? We are heading to holidays. Happy holidays. Wishing
Happy
everybody
holidays.
good holidays, happy and Merry Christmas, whoever celebrate that, and Happy New Year for upcoming New Year. And we'll see you everybody in the new year now. Thank you.
Thank you, Sam. Happy New Year.
Thank you.
Bye.
Thank you, everyone.